A wild thing happened this week. While the whole market was bleeding, one token pumped 40%. And it didn't happen because of hype, but because Wall Street is pushing hard into crypto. But first we need to understand why everything else crashed. Crypto finally got exactly what we've been waiting for months. Good news. We are hearing peace talks regarding iron. Oil prices are going down and tankers are moving through the Strait of Hormuz for the first time in a week. By the book, Bitcoin should have taken a breath and bounced back, but it did the exact opposite. This week, Bitcoin dumped from almost 78,000 down to 73. Ethereum broke below $2,000 for the first time since March. And on Tuesday, someone dumped $1.3 billion worth of BlackRock's Bitcoin ETF anonymously through a dark pool. It's the biggest dump we've ever seen. The news was positive, yet the biggest money still rushed for the exit. And that is the real mystery of the week, not the price. I'm going to break it all down for you. I'll show you the liquidation map, explain what's actually growing, and give you a clear game plan for next week. Welcome to the weekly breakdown. By the end of this video, you'll have a crystal clear picture where the key levels are, where the liquidations are hiding, what narratives the money is flowing into, and what to do about it. If you find this format useful, drop a like right now. It really helps the channel and it motivates me to keep making top-tier content regularly. Let's go. Here's the quick recap so you don't miss a thing. Oil crashed more than 10% this week, down to almost $90 on hopes of peace. So for oil it was a great week, but crypto is completely red. Looking at the numbers by the end of the work week, Bitcoin is sitting around 73,000. Bitcoin dominance is 59.5% and it keeps growing. Ethereum is exactly at 2,000. Solana is around 82. But the most important thing is hiding deeper. BTC and ETH dropped 5 to 6%, but mid-cap altcoins got absolutely destroyed. Bitcoin Cash is down 20%, Zcash down 16%, Sui down 18%, INA down 17%, Uniswap down 15%. Only a few players actually pumped, but more on that later. That explains the growing Bitcoin dominance. Investors are simply hiding in the safest, most liquid corner and sitting there. It's a classic risk-off mode. Now for the most interesting part, the reason you should watch until the end. The Bitcoin liquidation map. There are the levels where leveraged traders get forced out for their positions. The market loves these zones. It's drawn to them like a magnet. And the picture right now is very interesting. The biggest liquidation clusters are hanging above the current price. One is at 78,000 and the second, even thicker one, is at 80,000. This means a ton of shorts are packed right there. If the market bounces even a little bit, it could get pulled straight up to wipe out those shorters. Then a simple bounce turns into a massive surge upwards. But looking down below 72,000, there is almost no liquidity. Keep these levels in mind. Okay, why is smart money exiting right now, just when the news got better? Yes, oil dropped hard, but it was too late. The inflation damage is already done. Because US inflation jumped to 3.8% in April, hitting a 3-year high. The shot has been fired and the Fed's hands are tied. Nobody is going to cut interest rates with inflation this high. And without cheap money, risky assets simply can't breathe. So here is the answer to the main question. Why exit now? Because we aren't just facing one event. We are facing a whole obstacle course and it starts next week. Look at the calendar. Next Friday, June 5th, the US jobs report comes out. That's landmine number 1. A few days later, in mid-June, we get the May inflation data, landmine number 2. And right after that, on June 16th and 17th, the Fed meeting. And it's not just a regular meeting, it's the first one for the new Fed chair. Powell is out, his term ended. On May 22, Kevin Warsh took the throne and he's Trump's guy. There is your reason. 3 heavy hits in just 2 weeks. It's basically 3 coin flips in a row and nobody can predict the outcome. Now add some extra drama. Trump is demanding the new chair to cut rates. Inflation is saying that cutting rates right now is suicidal. suicide. And the Fed committee itself is more divided than it has been since 1992. Walsh is stepping into this absolute mess on his very first meeting. Smart money doesn't walk into this kind of uncertainty with heavy bags. They offload in advance, before the first landmine, not after it. That explains Tuesday's billion-dollar dump. It wasn't retail panic, it was cold, hard logic before a massive wall of events. By the way, I break down these real-time moves on my X. The link is in the description. The market breezes every single day. When the breaking news hits, I post it there, instantly. Subscribe so you aren't the last to know the important stuff. Let's talk about the game plan for Bitcoin. 73,000 is the front line. We hold it, we stay in the game. If we lose it, it's a fast drop down to 67k, where there is a huge volume, and in a worst case scenario, down to the February bottom at 60k. Looking up, things will come back to life when BTC reclaims 77 to 78k and holds it. And this is where the liquidation map works in our favor. Right above that level are those massive short clusters at 78 and 80k. If we break 77k with strong volume, the market can naturally drag itself up there by liquidating those shorters. If you are planning to trade this, a quick side note. I personally trade on Bybit. The link with a deposit bonus is in the description. It gives you a nice head start. In a choppy market like this, you need an exchange that doesn't lag right when you need to jump in or out of a fast move. And let me be completely honest. This is not financial advice. This is just my analysis. You make your own choices. But there is one golden rule. Nobody who wants to survive until June trades without a stop loss right now. If you trade without a stop against the war and the Fed, you aren't a trader, you are a gambler. Now let's talk about the biggest pain of the week. Ethereum. ETH dropped below 2000 for the first time since March. The ETH to BTC ratio is yearly low. This week, even the Ethereum Foundation had to respond to the criticism and announce a restructuring. The fact that they are making excuses is a clear sign that the tension inside the project is at a boiling point. The crypto space is split in two right now. For some, Ethereum is a broken narrative that should be written off. For others, the ETH to BTC pair sitting at a year low isn't a death sentence. It's a discount of the decade before a massive reversal. Let me know what you think in the comments. Is Ethereum a dead coin right now, or it's a life-changing chance to buy at a huge discount? Let's see how the opinions split. And as for the levels, while Ethereum is below 2000, it's weak. If it reclaims 2100, we can finally exhale. Now back to that wild thing I mentioned at the start. While everything was bleeding, a few altcoins were doing massive multipliers. And this wasn't random. It's a signal showing exactly where the smart money is flowing. The main story of the week, Stellar, ticker XLM, is up 40% this week, and there is a solid reason for it. The DTCC, the backbone of the entire US stock settlement system, announced that they will tokenize assets directly on the Stellar blockchain. Real stocks from Russell Index, ETFs, and US Treasury bonds. The launch is set for 2027. This isn't just PR pilot program. This is a Wall Street officially moving onto the blockchain. And it's not an isolated case. The very same week, Ripple, along with JP Morgan, MasterCard, and Ondo, completed a cross-border settlement using tokenized government bonds on the XRP ledger. Meanwhile, the HYPE token was hovering near its all-time high, around 60, driven by the narrative that Hyperliquid is outperforming the whole market because it actually generates massive real revenue instead of giving empty promises. Do you see the connection? While BTC and ETH are sinking, money isn't leaving crypto entirely. It's flowing into one specific narrative: real-world asset tokenization and projects with actual revenue. This is where the strength is right now, and I told you about that in previous videos. Let's wrap this all into a final plan, so you leave this video with a clear head. Number one, the main trigger right now isn't on the charts. It's in the news about the Strait of Hormuz. If peace is secured, oil drops, inflation drops, and we get hope from the Fed. If talks break down, we bleed again. Iron headlines are the most important than green or red candlesticks right now. That's our current reality. Number 2, landmines ahead. Next Friday is the US jobs report. June 16th and 17th is the first meeting of the new Fed chair. All of next week is just the building to this. So the market will chop in both directions. On a roller coaster like this, don't try to guess, just react to the facts. Number 3, the key levels. If Bitcoin holds 73k, we are alive, and we have those magnets at 78, 8 and 80k right above us. If it loses 72k, there is empty space below it and nowhere to bounce from. You have to react to what you see. Number 4, if you don't just want to sit in the red, but actually want to understand where the game is heading, watch the RWA tokenization narrative. That is exactly where the money went this week, while everyone else was staring at Bitcoin. If this breakdown gave you some clarity, hit subscribe. I'll be dropping this every Friday, and I cover the daily moves on my X all week long. Drop a like if you watched till the end, and make sure to comment about Ethereum, debt or discount. Protect your capital, don't trade without stop losses. That's all for me right now. See ya.